All right, welcome in everyone. We'll give everybody a little bit of time to start rolling in. I know everybody's sometimes a late bloomer. We have Policing Pips with us today. I'm sure there's a backstory to why it's Pips and not Ticks.
Yeah.
We'll get into that later. So we are going to be doing a giveaway today. We're going to do 50 likes and we'll do 2 accounts. And additionally, with those 2 accounts, we're going to give away some free coaching, which is an extra little incentive, a little cherry on top. So today, my guest is Policing Pips. What is your first name?
My first name is Anthony.
Anthony. Okay, Anthony. Cool. So, it seems like you've been trading potentially some Forex. So let's get into your background a little bit. Where did you come from? How long you've been trading? What got you into trading?
Sure.
And let's start there.
Like I said, my name is Anthony. I've been trading on and off now since about 2017, right? My name there, Policing Pips. It's Policing Pips because obviously I'm still in law enforcement. I started in law enforcement in 2015, so going on 10 years, a little over 10 years now. Started in New York City. I was there for 6 years. And while I was there, in between calls, in between jobs, everything, you get bored and you start death scrolling on Instagram or Facebook or whatever. And then you kind of realize you're wasting your time, right? You just feel empty after that doom scroll that you do. So I was always interested in financial markets. At the time, I was working in the Times Square unit. So we had the NASDAQ right there in my face. I had Morgan Stanley, all the biggest banks, all the traders are walking by you on the street, right? Like, you're in your uniform and they're making good money to go be in the office in the air conditioning while you're sweating on the street. So, one thing led to another, kind of fell into the Forex end of it, right? Everybody searches how to trade, how to make money, and that's where you land, right? You land on the Lambos, you land on all that fun stuff. I wasn't really interested in the flash of it. I already had my first kid at the time. Well, we were getting married, pregnant, having a kid. So I was more interested into the make more money for my family kind of part of it, right? Find a way to occupy my time with the more in-depth and exercise my brain other than death scroll, right? So I fell into Forex. That's where you get the Policing Pips. My first mentor at the time that I ended up finding through the Flash. These guys were out of Atlanta. They were more process driven, teaching you about fundamental analysis and understanding the depth of the market, really where I wanted to be, right? I wanted to not just make money, but understand why markets were moving. Just kind of the way my brain works. I'd rather know why or have an idea why and then make a decision on it. It kind of leads me into now where I'm at now. But they kind of taught us you want to do it as a business, right? Everybody's presenting that now. That's been their thought from the beginning. So it's kind of helped. So I incorporated, and the name that I chose was Policing Pips. So kind of along the journey, it's found its way, margins and the shady stuff that would go on in Forex that doesn't necessarily go on with the regulated markets in the United States. So switched over to the futures market, ended up a little bit in the equities world, kind of dabbled a little bit. Probably picked a bad time with the way COVID was handled and trying to learn a new strategy all over with a prop debt. And then kind of found my way back into futures just because I like the ease and the access, the margins, the new funding companies. You guys obviously are kind of trying to change the game a little bit. So that's where I've gotten back into futures, and I've just kind of fell into a really nice niche with it. It's accessible. There's ease into the markets. It's very liquid. You're going to get what you get out of it, or you're going to lose what you're going to lose. But really, at the end of the day, I find it's like a nice balance between the equities and the Forex world. So that's kind of where I've gotten to at this point. Now, I could change my name to Policing Ticks or whatever I'm going to change it to, but that LLC is going to have to stay the way it is.
It's an OG name at this point.
Yeah.
So, kind of same thing. You want more for your family. I'm sure through the process you learned that it's a lot harder than people portray it to be, and that's great that your first teacher, your first mentor, really pushed process, right? Because that's not glamorous. It's not fun. It's not none of that, right? You read the books, you read all this stuff, you think you're going to kill the market, and they tell you, 1%, respect risk, blah, blah, blah. But it's like, no, I don't want to do that. I just want to make money, right? So it's good that you started in that way. So you had a different view. I started in a completely different realm. I started with you're trading, and that's more of like a pump and dump, totally not managing risk, because you can't, because these stocks move so quick and they're so illiquid that you can't really get out when you want to get out. You're taking slippage of 10, 15 cents, and then that 1,000 shares that you thought you were risking a couple pennies on, now you're risking 30 cents, and that's a big difference. So that's great that you stumbled into the futures market, because I found the same thing with futures. It is regulated, and there's nothing like where you have dark pools with stocks, and you can both go long and short, and there's no difference, right? With stocks, you got to find locates, you got to borrow those shares, and then sometimes there's locate fees associated with it. So it's just a really well-rounded thing to trade, and there's so many different things you can trade inside futures that it's amazing. So I know you were talking about a little bit with Raj before the show started. So you found your way into some type of like mean reversion strategy. What are you doing now? Like what is it that you've gravitated towards?
So going back to that original mentor that I had, a lot of what we did was finding that fundamental bias, right? Let's say it's the Euro USD, right? You're trying to figure out what's driving the US dollar to get stronger against the euro, vice versa, and all that stuff. But we were looking for fundamentals. We were looking for extended moves and then consolidation, and then trying to mean revert back more in a swing trading environment, because with Forex, I think that's really the best way to go about it. If you're going to kind of actually trade it correctly, the foreign exchange markets, it has to be balanced, right? You have to find your way back and forth through the mean, and the swings are a better way to go. I was more like, I need to be in and out. I don't want to be going to sleep with positions on, right? I need to find a day trade strategy that worked for me. And then over the years, you go through every single one with, fibs and, all these other indicators, and your chart gets muddied. And I know Josh posted the other day a chart with all the lines everywhere, like looking like a disco, right? But I kind of just wanted to simplify it down and down and down and down. And I've just gravitated over time to figuring out like, all right, what is consistently happening over and over and over again? And you just realize that it just comes down to a few levels that are where market participants want to either get in or get out. And it's very recent, right? I use longer term levels. I do use daily, monthlies, but they're not involved in my day-to-day process. My day-to-day process is marking out overnight highs, overnight lows, previous day highs, previous day lows, and then I use a VWAP. A lot of times, most people, retail side, want to go and follow the trend, look for the breakout, and those tend to fail, right? So I was just noticing I would get in on breakouts and they fail, get in on breakouts, they fail. So I started to develop a strategy where I look for the breakout. I sometimes incorporate cumulative delta, trying to see if I can get them off sides on either a long or short position, and then I just fade them back to the VWAP, try to take my little piece of a move. Coming into this environment, it's kind of scalpy at this point, right? You're getting hundreds of points in minutes. So I don't really classify myself per se as a scalper. I will hold the position all day if I could. It's unlikely, right? I'm going to take my previous day high, my previous day low, and then just bring it back to the mean, take it off at VWAP. Most of the time, I'll post, if you follow me on Twitter at all, or X or whatever it's called now, you'll see I'll post where I have a trailing stop that starts at VWAP, and then I'll just let it auto trail. And once that profit target gets hit, if it wants to run past VWAP and go all day, then cool, let it take its a little bit of extra. But the day-to-day base hit is extended move out from VWAP, fade it back, and pretty much consistently, when I do it correctly, markets tend to be in consolidation 75% of the time, so that win rate could be up there around that point. Lately it's been a little bit skewed because your risk has to be a lot wider, but I've shrunk down to 1 micro and just trying to let it work. But it's kind of just always adapting to whatever the market conditions are kind of going to be. But this is something that I've found over the years that works in most every condition, right? It's either going to tag a low or a high, and then it's either going to run or it's going to continue, and then I'm not going to have a trade, right? But if it never hits any of those levels, then we're completely consolidated. There's no real trade. It's just a lot of noise. So you're not going to get a lot of back and forth, and you can kind of leverage that.
That's cool. You got a framework behind what you're doing, and I can tell you have a very solid framework. And I think that's one thing I really recommend people do is it doesn't really matter how you develop the framework, but have a certain way that you look at the market every single day that stays consistent. Because with consistency, you're going to be able to do back testing, forward testing, and find strategies that have an edge. There's so many strategies in the market that have edge, and it's really coming down to the trader and being too random to really find the edge, right? And fortunately, with data and data being so easy to obtain, and statistics and stuff, I really hope that people lean into that. So you've been trading for quite a while. You said 2017.
Yeah.
So during that time, I'm sure you've kind of fallen into the trap of some of these struggles that most traders fall into. What are some of those struggles you fell into as a trader, and how did you get better as a result? Like, what did you do to actually get better? Did you have an actionable plan to get better? Like, I'd love to hear that.
That's a great question. Like I said, I fell into a lucky trap of, I'm very research oriented. My path within the police department in New York was to be, a detective. So I was always more analytical, and where that kind of does actually play over, right? A lot of people, don't really understand what goes on in law enforcement outside of what they see on TV and cops and stuff. But like, there is a depth to it past that. So, that I got lucky because I did the research, I did my investigation into these people who teach me, but I recommend that everybody does that. Don't just hop into a group or Discord. That's just a side point, right? Do your best to find that person who actually speaks to you that makes a lot of sense. But they told us, develop a trading plan. You're writing up what your risk is going to be, what your strategy is, what you're playing this market, what you're playing that market. What are you looking to do as far as short-term, medium-term, and long-term, goals? And having that right up, it helps you in the beginning, and then you deviate, right? Because nothing works immediately unless you're lucky. And, some people they get lucky and they hit it big on a trade and they just keep going. I think that that's a detriment, right? You don't really get to do the whole learning process of going through the hardships of burning accounts or strategy hopping, right? I started with that foundation, and then I deviated because, the money doesn't come fast enough. If you're a cop, you're making $40,000-$50,000 a year and trying to pay the bills, and you're just putting a couple $100, $1,000 into a Forex account, and you're like, okay, 1% of this is $10. I'm not making anything on that, right? So the traps that people fall into is they scale up too quick. They try to flip $1,000 account to a $10,000 account, and then they just burn it, because all you're doing at that point is gambling, right? You're not managing any sort of risk. You're not allowing your systems to play out, because then you see, okay, my $1,000 is gone, and now I jump to the next system where I'm going to use the fibs or the ICT, or I'm going to use whatever. There's no perfect strategy, like you said, you want to develop something that's yours and yours alone, because then you'll be able to repeat it over and over again. But you fall into that trap that everybody does, and I'm going to say it, over and over again. Over the years, I came out of it. I thought, okay, Forex is not where I can make money. I'm going to go to futures. And then I came into futures, and I was doing decent with it, but didn't see the scalability at the time. And then I went back to Forex and tried funding companies, and then you kind of just fall into the shiny object syndrome, but not necessarily shiny objects, but just, I need to figure out what that holy grail is, right? And there isn't really that holy grail other than putting in the hard work and then just doing literally the same single thing every single week, every single day. And then eventually you'll see that, if we share my screen later, you'll see that I have a very boring chart in this evaluation, but it is profitable long-term if you can just stick to it one by one by one. I think really the biggest mistake that I make and that everybody makes is that holy grail system. They want to find that next mentor who's going to sell them a course, who makes money on affiliates and not necessarily on trading, right? It's easy for them to trade and put on 10 lots because they're making $100,000 in affiliates, right? Because then they don't have to worry about losing that account. They'll just do it again tomorrow, and then they make that money. So that's not really something that you can do long-term that's going to help you successfully build a strategy that's going to lead you to long term. So I think realistically over the years, the biggest mistake that I've made is just that strategy hopping, that next holy grail system that's going to take you to the promised land, when all this career is that if you want to make it a career, you have to actually treat it, like I said earlier, like a business. Like, you have to have repeatable strategies, and you have to be able to just come out every single day and do the same thing. And then if you win, you win. If you lose, you lose. Obviously, everybody gets mad when they lose. I'm mad every time. You're like, oh, great. You just have to recognize behavior patterns. Another thing that I think law enforcement helps with, where you're you're recognizing behavior patterns within the market, but you're also recognizing behavior patterns within yourself, right? So you find yourself on a scene and you're getting into a situation where things get a little escalated. You're gonna have to recognize how you're responding to it in order to come across to that person. Same thing with the markets. Yeah, the market can do whatever it wants. You have no effect on it. You're going to click a button and then you're going to click a button again, and then it's going to either make you money or lose you money. How your body reacts to it, you just have to understand what your telltale signs are for that kind of reaction and then go to it. So I think over the long term, if you can learn to master yourself per se, that's going to help you longer term. And I think those are the biggest mistakes that I made up until this point, and I'm going to make more moving forward because that's just how it works. But up until now, like I said, on and off, more consistently, I've been trading since 22, more full-time-ish, 2021, 22, like after COVID, right? Because we had that, couldn't really trade that, while working, riots and stuff. So,
yeah. Yeah. So definitely, the traps that you talk about, a lot of similar traps that pretty much everybody falls into, the wanting to get to the finish line before you even start, looking for the perfect strategy that never loses. And that really comes down to, the psychology behind losing. It's not fun. No one wants to lose. No one wants to be up on a trade and then give that trade back. But look, trading isn't about winning all the time. Trading really is about process. And the more you can focus on the process and get away and ignore your P&L, the better results you're going to see. Because look, trading is about statistics, and it's not about intraday statistics. It's about months of statistical advantage, right? You have an edge in the market, but if you don't take all those trades, the edge is never going to play out, right? So it's really critical that people understand, like, I have to get good at being self-aware, because when you go on a losing streak, for me, it's 3 trades and I need to take a break. Not be done for the day, but I got to get off the computer. I got to go, make a sandwich. I got to meditate, whatever it is, right? Go for a walk with my dog. You got to get off the computer, because look, your emotions are starting to hijack your thought process. And once that happens, I don't care who you are. You're so agitated, you're not going to think logically. And like he said in law enforcement, look, he's dealing with some irate guy, and there's 2 different type of officers. One that will yell back at the guy and agitate the situation further. That's a bad trader. Another trader or cop that's very experienced knows, no, I'm going to de-escalate this situation because I know it can get out of hand, right? Same with trading. You got to de-escalate these situations, these trades that you're in, right? You got to de-escalate yourself so you don't go into tilt. Because once you're in tilt, I don't care who you are, how good your self-control is, dude, there's no controlling it. Like, once you're tilted, it's game over. Like, either you're going to hit a hard stop on the day, you're going to blow something up, or you're going to get lucky enough to catch a good trade to get you break even. And then you're going to be sitting there going like, oh God, thank you so much for getting me out of this. And then you're going to do it again. So you got to find a system. You got to find a system that stops you before you lose control, before you lose that thought process. And really what it is identifying your habits, your behaviors, right? What he talked about. And it's 2 trades, 3 trades, 4 trades. I don't know what it is. And you can also go tilt on the positive side. So you get on a winning streak, 4 or 5 trades, and then all of a sudden your risk is way out it's out the window. You're like tripling your risk, quadrupling your risk. You're like, oh, no, I'm on a hot streak. I'm going to keep it going. It's like, what are you doing? Right. You can lose just as much by doing that. So find some type of system or safeguard that gets you to be self-aware before you get into that state, because once you do, it's game over. It's tough. It's tough. Cool. So strategy hopping, never a fun thing. Let's pop up. Actually, you know what? Let's jump into a few questions. Let's do the giveaway, and then let's get into your charts and kind of go over how you're using our platform and what advantages you've seen, like, by looking at your data, because we're so, we're really trying to get people to focus on the right things. So he's been in the trading industry since 2017, so a long time. And you inspired by the right people. You were out there on the exchange looking at all the bigwigs walking by and, jumping in their Lambos and stuff. But
being in Times Square, it's, you got the richest people in the world and the most homeless. So it's like you said, with de-escalation, it's both ends of the spectrum right there.
Mm-hmm. Yeah, absolutely. Yeah, I'll let you answer this one.
So daily loss limits for me personally, I'm setting with the TFDX. I set a hard stop below the whatever your limit is. So my limit's right now 400. So I set my hard stop at 200. I really try to stop before I get to two. But it's only a couple trades. Like I said, my strategy is very simple. So it's hard to really try and hammer it home too much. If I start to feel that, that lockout button is a big help as well. So those daily loss limits, once you start to feel, he was talking about like where you can notice your behaviors, but you can start to feel the physiological effects, right? Everybody knows when they start to sweat. Everybody knows when they start to get hot behind the ears. That's when you're not going to do the right thing, right? So aside from just those really great tools at TFDX, I don't use Rhythmic, so I know there are lockout features with it, but when it comes to the lockout features of that X platform, it's top notch, right? Like that is the ultimate tilt preventer. If you can lock in your risk settings before the day starts, you're never gonna be able to break it. And it's just you're gonna be mad because I couldn't make back my $60, but you're gonna be happy because tomorrow you're gonna have an account because in the other accounts you burnt them. So I think
Yeah.
realistically, burning them over and over again is gonna help you with that loss limit.
What's crazy is people don't realize that, like in the moment, you're like, no, no, I want my $60 back, and
Yeah.
in the moment, it feels like it's worth the risk, right? It's worth taking that. It's worth being stupid and getting that money back. But then the next day, you kind of wake up and you're like, oh, yeah, that sucks. I just lost that account. Like, what was I thinking? And generally, like you said, there's actual feelings in your body, and this is why I challenge everyone to do this starting now. Right? Try for the rest of this week. Do this. Take a trade. If the trade's a loser or a winner, close your eyes and go from head to toe all the way down and check your body. Are you breathing rapidly? Are you tense? Are your shoulders like up here? Are you like death gripping your mouse? Like, are you leaning into your charts? Are you breathing rapidly? Anything that you can notice that's outside of your normal baseline, and identify that after each losing trade, each winning trade, and find out what your trigger point is, right? If it's two trades, it's two trades. If it's three, it's four, whatever. But if you have an early indicator like, hey, this is going sideways and this is not going to be good, it helps you stop before it starts, right? So please do that. It's a great challenge. I'd love everybody to do that. So he did answer the daily loss thing. Look, the daily loss limit, and I know people hate the daily loss limit. They're like, oh, I don't want a daily loss limit, and I hate this. And it's like, you guys have been taught to look at risk the wrong way. Look, why are you risking your entire account, your entire trading account in one day? Like, that is the most crazy thing, because your risk of ruin is like, it's crazy. Unless you get lucky, you are never going to survive in the market. Even if you make it through the eval, if you're not managing the risk correctly, you're going to blow your live account if you risk 40% of your account every day. You don't give yourself enough runway, right? Any system is going to have drawdowns. Any system, even a 50% win rate, can have 5 losses in a row. And most of these people per trade or per day, they literally risk half their account or more, right? Yeah. How are you ever going to find success that way?
I think most people, piggybacking off that, I think most people get blinded by these other firms telling you, okay, you got a $50,000, $100,000, $200,000 account, when you really have a $2,000 account, right? So, yeah. Sorry to interrupt, but I think that kind of does help.
No, and you got to look at the drawdown amount, right? That's what you're trading. It's the margins, the margins. It is what it is. That's why we don't call them 50K, 100K, all that other BS, because look, you're not getting you don't have $200,000 in an account, right? That's not your trading amount. Like that's not your drawdown. Your drawdown is your drawdown. That is what you're trading. That's what you have to safeguard. That's what you have to protect through proper risk management. And a lot of people, would love for us not to have a daily loss, but look, we're not going to do that because it's bad for the trader. It's like, no, you shouldn't even be using the daily loss. That's an emergency stop. If you go into tilt, or if you forgot to set your risk on the day through either Rhythmic or through the platform, TFDX, you hit that emergency stop, and at least you don't have a blown account, right? That's the purpose of it. I wish we could lower it even more for people, because it would help them understand, like, no, we're not in the game of making a ton of money. We're in the game of managing risk. That's the bottom line. And if you manage risk properly, you will get really big earnings. Like that, it is what it is. But you got to do it through a lot of trades, and it's not going to happen overnight. It's just not that way. Let's keep going in some more questions. Let's go ahead and let you answer this one, Policing.
Sure. How can traders overcome performance anxiety after passing evals? You pass and you freeze up, you fall on the ball and you get to live. Pass 10 eval accounts, power firms only get 3 payouts. So realistically, a lot of times I would have fallen into that trap too, right? I'll pass an account in say 2 days, just because you're over leveraging these accounts when you're doing your evals, right? And then you get into a real trading environment, you're like, oh man, I can't over leverage, I can't do this, but then you do it anyway, right? So my biggest piece of advice, right, if as soon as you get into a funded account, as soon as you get into a live account, let's say you get it on a Wednesday, don't trade that account until Monday and scale down, right? If you trade one full mini on a NASDAQ, which you probably can't in this environment anyway with any of these accounts. I mean, some people do, but they're very risky in that point. I trade one NQ most of the time, but I have scaled down to one micro at this point, right? So learn to just pull it back. Once you have the account, it's yours, right? Nobody's gonna take it away from you. Just take it one day at a time, just like we've been trying to kind of hammer home here. It's all about that process, right? Stick to your normal process. Yes, you want to go day one and build that buffer, so you don't have to worry about, losing the account later. But because you're doing it that way, you're already setting your psychology behind, right? You have to be in the mindset of my system works, here's the process, and allow it to just do its thing over time. And it's so difficult to do, obviously. Like I said, everybody's in these accounts because we don't have $100,000 to throw in a cash account to try and use, right? So you're in these accounts because you want to make money. Nobody's doing this because they don't want to make money. They just, I want to be here so I can click buttons. I love the process. I love everything about it. And the byproduct of that is you eventually make money, but you have to really stick to the process and allow yourself to take that breather. Hey, I passed this account. Awesome. Give yourself a pat on the back. You've done it, because it's not easy to pass a lot of these accounts with a lot of these rules. Even here, there's rules that people disagree with or agree with, but you still got to stick within the parameters of the rules. And then eventually, once you get your funded account, you have to just take that step back and, see, okay, what are the rules now? Okay, because right, we have that consistency rule here, but when you get to live, you're not going to have that consistency rule. Are you going to change your strategy that got you here, or are you going to stick with what got you here? And the best way to do that is to take that step back, take the breather, right? Wait till Monday. If you pass on a Monday, wait till the next Monday. It's not a rush. You have a live account. The company's not going to go under in a month. And if it does, then so be it. Just take your process one day at a time, one trade at a time. And I think the biggest thing is scale down once you pass. If you're in the habit of I pass, I fail, it's because you're oversized. And that's really the biggest thing to it. You're oversized, and you're probably already on tilt before you take your first trade because you're so anxious to make money. You have that, like where he said your shoulders are tight. You came into the day because your office is cold and you're wearing a sweatshirt, but now your sweatshirt's off, your t-shirt's off because you're sweating and you can't fully focus on your process. So I would say the biggest thing is focus on the process, take that step back, enjoy that you passed, and then just one trade at a time, just like you did to pass, and then you should be fine. It just takes time.
Yeah, and to piggyback, we've transitioned, me personally, probably a couple hundred traders into live, right? As well as handling traders now that are in our brokerage accounts. You got to understand, there's different methods of passing these accounts, right? Some firms really encourage over leveraging because their purpose isn't to get you to get a payout because they pay out of pocket, right? The purpose of proper risk control and sizing appropriately. Most of these guys will tell you to size 10 lots or something like that. It's like, dude, you're not going to survive with 10 lots with a $2,000 drawdown unless you get on a lucky streak and then you pass the account. Yeah, congrats, you passed the account, but you're not going to survive long term, right? What people generally do when they transition into live is they change what they were doing and how they were successful, right? With us, I know generally what's happening is the ones that find success are the ones that actually take a step back and size down, right? It's not a matter of that you're not able to trade any longer or anything like that. There's extra tension in your trading during this transition, right? It's no different. You can do the exact same thing, but by sizing down, look, it's like playing a professional sport and going to like this big arena for the first time, right? And everybody's watching you. You kind of feel like everybody's watching you in the brokerage, and now this is your only chance to make it. So you make every trade so important. And when you do that with extra leverage, you're set yourself up for failure because you're going to mess up. You're going to fat finger. You're going to flip on a trade you shouldn't have flipped on because everything's so important to you. Every trade is so important, right? So by sizing down, and I mean really sizing down, you give yourself enough room to be wrong and enough room to make mistakes, right? So if your normal trading style in the assessment is one mini or two minis or something like that to get through the assessment quickly, you should be probably sizing down to one or two micros max, right? And your risk should be appropriately adjusted for that. Meaning, let's say if you're risking $1,000 in your drawdown, total drawdowns 3, you have 3 days to make it happen. It's like, dude, you're not going to make it happen unless you get lucky. Versus, hey, I sized my risk all the way down to $200 or $300. I have 10 days to get comfortable, find my rhythm, get into the flow, and make this happen, right? You're giving yourself enough opportunity to find and catch that momentum in your own trading, to catch the flow state, right? So set yourself up for success by sizing down. I know you don't want to, but do it, right? The perfect analogy that I have is like everybody wants to get build a big old buffer in the live brokerage. They want to like speed and get their Lambo and all this other stuff, and they're speeding, right? Everywhere they're going, they're speeding. But it's like, okay, so if you're driving down the street and you're speeding and you get pulled over by a cop, and now you're delayed by 10 minutes to wherever you're going to go, are you actually faster or slower? And that's the same thing. It's like, if you blow your account, are you any further ahead than if you would just scaled way the heck down and respected risk? You would still have your account and actually probably be making money and getting payouts, right? And then with us, and I know this is kind of extended beyond, a couple minutes now, but with us, I would highly recommend, if you pass an account with us and you've had struggles in the past, take a payout, right? Let us know if you've had problems in the past. We'll do like a 90% payout for you, right? The purpose behind that is to pay yourself, reward yourself for doing something positive, right? And reinforcing good behaviors, and then talk with us. Like every time we're trying to transition somebody, we try to meet with them to give them a game plan, because it's really important to us that they also succeed and find long-term success. So I know a little bit long-winded, but I think it was really great question. So Chris, go ahead, policing.
All right, so discipline. This is the biggest thing. I really, the career discipline is different for everybody, right? As far as police officers, you just have to do what you got to do every day. Some people, I don't think discipline really, when it comes down to it, law enforcement is like the right answer for that, right? Because you're just going and doing what you have to do, call the call, whatever you're doing. Yes, you have to be disciplined because you have to be professional. You have to do things within the law, within the scope of the law. I think really my consistency comes from, I was a Division I athlete. I played college baseball. You learn at a very young age, like if you want to play at next level or if you want to go further along, you have to do things in a very structured, very disciplined way. Especially for me, right? I was never the biggest, strongest, fastest, but I had to develop something that would outpace other people, right? So whether it be discipline, hard work, all that kind of plays together. For me, I think that's really where it started, and then it just kind of worked its way through my life. I think athletes are great traders if they could stick to a good discipline. Law enforcement, like I said, I think it helps more so on the emotional side than it does so much on like the discipline side, because, cops aren't as disciplined as you think. And I think really just like the athlete mentality is where it's at. But for me, my discipline, where it comes down to, is just doing everything the same every single day. You don't have to go and make an ice face bath water thing that everybody's doing right now. But for me, every week on Sunday, I do my full macro review, right? And I do a write-up that I post on my website, my Day Trading Coffee Company website. I do that more for me. I don't necessarily do it for everybody else, but if you get into the habit of, say you read mine or anybody's newsletter, they took the time to come out and review, all right, what's going on in the world today? What is the macro environment within all of the economy, right? I'll do that broad spectrum. I'll do longer term levels, and I'll just write it in a very simple form. So I write it out on Sunday. And then I not, really don't ever look at it because I just remember it because I've been doing it for so long. But if you have to go reference it, you have a place where you can go, okay, I see this is where this is where that is. And then every single day, I take my son to school, I do everything the same way. And then I come back to the chart and I have the same setup every single day, right? So the biggest thing for discipline as far as strategy is concerned is having the same strategy that's repeatable over and over and over again, right? It makes it easy for me to be disciplined. I could show up to the chart 5 minutes beforehand. If I'm late with my son to school or something happens where I have to just run around, or I'm late from work coming home, I know where my levels are already because I did it on Sunday. And then my levels daily are always the same. It's overnight high, overnight low, previous day high, previous day low, and VWAP. I don't have to do more, right? So simplifying down your strategy into understanding what you're going to do on a day-to-day basis is going to increase your discipline, because you don't have to worry about all the other factors because you already know what you need to do, right? So yeah, everybody wants to do all these fancy strategies. They want to do everything. They want to jump and jump and jump. But if you don't stick to the same thing over and over again, then you're not going to be able to implement discipline within that same strategy or system or anything like that. So like I said, I think it comes from being an athlete, what my dad implemented for me as a kid, all my coaches growing up. And if you don't have discipline currently where you're just not able to do it, then you have to just figure it out on your own, because nobody's ever going to be able to teach you discipline. If you're always late to meetings, you're going to continue to always be late to meetings until you change something about yourself. So, I would love to give you the perfect answer to becoming disciplined, and everybody could go start at New Year's and then end in February, or you can do it every single day and then forget that you're doing it. And then all of a sudden now you're disciplined because it just is something that is inside of you and becomes part of your just everyday do it and do it and do it until it's just becomes something you don't even think about. So yeah, it's hard to just do it in a question.
Yeah, and let me talk a little bit about discipline. He brought it up. Look, if there's a lack of clarity in your setup, right, or what you're trading, how can you be disciplined? Like, you don't know where your stop's supposed to be. So how are you supposed to be disciplined with managing your stop? If you don't know what strategies you're supposed to be trading, then how can you be disciplined if you're scalping, right? Like, you got to find clarity in your process, what it means to actually be disciplined. Because without clarity, then you're injecting randomness and you're never going to find discipline, because how can you be disciplined if you're allowed to change the rules all the time, right? You got to set ground rules that are clear and concise and related to how you trade, and get clarity on what you're doing, and then simplify as much as possible and start slow. So don't set huge lofty goals that you think you have to do every single day. Like, start small. Say, hey, every day I'm going to come in the morning, I'm going to do a self check-in. I'm going to see, did I get good sleep? Okay, I did. Okay, is the market bullish, bearish? This is context, right? And just do that every day and do it for a week, and then reward yourself for doing it for a week, and then add another component, and then add another one. And that's how you build good foundation and good habits, right? They don't come over at night. It doesn't make it any easier. Discipline isn't, this magical thing. It's like, dude, discipline's tough for everyone. It's not easy. It's just create a process around it, make it as clear as possible, and start working on it. Don't make excuses. All right, next one for you. Ooh.
Yep, absolutely. 100%. I really think, honestly, everybody has different emotions and impulses. And before you come into law enforcement, you think one thing, and then afterwards, you learn that your emotions and your impulses and your decisions affect more than just yourself, right? So I've learned over, like I said, I was a New York City police officer, started in the housing projects. I was a kid from Long Island, New York, right? I was never in projects. So you learn culture, you learn how to deal with people on a different level. And same thing, that kind of being able to adapt to a cultural environment and deal with certain things that would come to you that necessarily you would never deal with in real life, that you're living outside of that. Like everybody always says, you're not invited to the party because they want you to be there, right? You're always there, not invited, right? You're shutting it down or something, right? So learning to control your emotions when other people are in an excited state is really very helpful when it comes to trading, right? Especially in this market currently, everybody's I look at Twitter and it's hilarious to me to watch people so overreactive to tariff news or to trade deals or war or anything like that. Like this hasn't happened ever in the past, and it's never going to happen again. The sky is falling mentality isn't going to help you in trading. Same in policing or anything. Everything you've got to kind of keep an even keel throughout your decision-making process, right? Because the markets are going to move whether you like it or not. So I think you really just need to come down to being as emotionally even as possible, whether the market's limit up, limit down, or whether it's going sideways all day, or whether the sky is falling or not. You still have to come in here and execute your plan, and that comes back to the discipline thing, and that comes back to recognizing your physiological responses to stress, right? The sweating, the hot ears, the whole getting tense into your body, right? That whole thing comes with it. And I forgot who mentioned it once before, but you can't control how your body or how you're going to respond to a stressful situation, because your body's going to do it automatically. That's the fight or flight within you. You can respond to how your body reacts, however, and you can make decisions, right? You don't have to do what your body's telling you. You can overcome that, but it takes time and it takes practice. And I think getting kind of thrown to the fire in the law enforcement world definitely kind of accelerates that process. Sure.
Cool. So this is a pretty loaded question here. What's your favorite coffee?
Yeah, absolutely. My favorite coffee is Day Trading Coffee Company's coffee. Right here, I got it.
Oh, here's the plug. Here's the plug. Okay.
I'm allowed to do it, I guess. So I started Day Trading Coffee Company because I was searching for trading coffee last year, the year before, and I was like, I can't find anything. I found like it was a good niche. Me and my wife love coffee. All we ever do is go to coffee shops, find different places to get coffee from. So what we have is a coffee delivery service. It's likened to Black Rifle or any of those other companies where you can order it online. Everything's freshly roasted. I prefer dark roasts and espressos because that's just my personality, I guess, over the years, just becoming darker and darker. But my favorite roast is our Scalper's Delight dark roast, and then our short squeeze espresso. But we have 10 different roasts from light all the way up to dark and single origin, all that stuff. Bunch of swag. I don't know if this is a PG-13 stream, but this is how I remember not to do bad trading habits right here. So if you have a question, we always offer discounts too. So any TFD member can get 15% off if you use TFD15. So yeah.
Awesome. Let's have Raj step in. We'll do the giveaway. I know people are anxious to do the giveaway, so we'll have him jump in and do our giveaway real quick. We'll get back into some more questions and then go on from there. All right, spin it, Raj. Spin it, spin it, spin it.
If you win this, take it seriously.
Yeah, and to say if you've won before, please understand you're not going to win again. We'll just end up picking somebody else if you've already won. Go ahead and announce it, Mr. Policing Pips.
Looks like Seb is the winner of the first spin there. Seb, hopefully you're still in here. And ISIS.
Oh, congrats. Hey, all right, cool. So let's jump back into some of these questions, and then let's get into your charts. Or actually, let's do charts and then questions to round it out.
All right, you want to say this first, or?
No, you can just go over your charts, kind of talk about the data that you've seen, if it's been helpful to you, and how you're utilizing the tools, and kind of your statistics and stuff like that. Whatever you want to share, So
I'll start with this because it's simple, and I can really go into my charts later, the other chart. But going into my data, somebody asked before how long it has taken me to pass. I still have yet to pass because I am taking it as honestly as slow as possible, right? When it comes down to the trade desk here, right? There was a few things that he mentioned before with the routine, right? I find this to be super helpful for anybody who was asking about discipline. We're talking about, let me move this over so I can really get that feel. So the trade routine here, go into here and really utilize this. You can do so much, understanding of what you're feeling throughout that market, pre-market, what you want to do. That broad scale thing that I do on Sundays where I do that whole macro breakdown, you can do here in that trade routine, right? It's very simple. Click it. I already did it for today, so I can't open it, but there is active news. We have the FOMC meeting minutes later. I'm pretty much neutral almost every single day with when it comes to my market biases. When I tend to come in here and pick a direction, it's when I usually get myself off sides and I kind of either force in something or do something that I don't want to do. But that's just according to my strategy. If your strategy calls for you to understand that, okay, today is really bullish or today is really bearish, then make sure you're honest in your answers when you come through here. Have your daily goals. I have my daily goals set here. I don't know if I could look at them now. Can I look at them? Daily goals. There we go. So for me, you could set whatever you want here. Currently, I'm on paternity leave, so I don't click this one. I don't want to trade at work. Intentionally don't download the mobile because you get into something on the job. Some people can do it. I can't. I take only my A+ setups and my newborn duty since we just had our baby and I'm on paternity leave. If the wife says I need to come, then don't trade, right? Sometimes I break that rule, and then later when I do my review, then I can go ahead and grade myself accordingly, right? So I find that this part of the pre-market analysis could help a lot of people with that discipline and that routine, right? But be honest, you can't do this and just click through it. Honestly, this is such an individualized game, right? You have to be super, super honest, right? Today, I graded myself an A, but my execution was slightly off. I mean, it could have been either B or an A on my grading, just based on that I was focused on another company and another account at the same time. So really, that's why my execution was poor. Everything else, even though I lost today, I stuck to my plan. I managed my risk appropriately, and I didn't really get emotional. So I'm able to grade myself. And every single day, you can see I come in, and the grade is right there. I mean, it's super useful, this tool. You're able to really get a fact. Like if you made $600 today, but you didn't stick to your plan, you didn't execute correctly, maybe you could have made more, or maybe you should have never been in that trade at all. You have to be honest with yourself. Until you're able to take that full-on self-accountability, you're never going to be successful in trading or pretty much life, really. My biggest thing is self-accountability. I try to tell it to my kids. I tell it, make them do their things and be accountable for it. And if I don't do what I preach, then I'm not worth anything, right? So to me, if you're not self-accountable, self-aware, and understand that you are the one clicking the buttons, whether the platform freezes, whether there's outside factors that happens in brokerage accounts, and they're not going to give you your money back, right? So at the end of the day, you can complain and hopefully maybe sometimes you get your money back, but sometimes you don't. But if you don't take the accountability of knowing, okay, other people are talking about the platform being frozen, maybe I don't click the button, right? This is right in line with that. So stick with the accountability, do that. When it comes to reports, like I said, these are my active accounts. When my wife was pregnant and I was running around doing night shift and not focusing on my strategy, I drew this account down. These are 2 copied accounts. So I would like to be transparent about that. This is doubled, I guess you would say, because both accounts are pretty much exactly the same. From the beginning of February all the way till the day that my daughter was born, I just did not have any single plan. I was tagging trades, but I was taking trades with no setups. And we'll see that when I go to the simulator, how if you could just eliminate trading FOMO or no setups or just deviating from your normal strategy, how much better I could be well beyond past now if I would have just started trading after she was born, right? But I saw the opportunity to join a firm that I kind of believed in their mission and everything like that. And like I said, I do a lot of research before I jump into things, but I kind of felt like this was the right place to be. So I jumped in and I just decided to trade like a dummy. Didn't follow my rules. We didn't have the grading system, I don't think, back then. So I probably would have graded myself an F that entire drawdown period. I still was able to manage keeping these accounts because of good risk management. So if anything displays to you that you need to keep good risk management, should be this chart, because I was terrible. I mean, I traded awfully. I didn't stick to any plans, but I was able to manage to being, not hitting my max loss limit. And then once I was able to settle in, the baby was healthy, my wife was fine. I was able to set a good schedule, a good routine with everything. Yes, maybe I'm not well rested every day still, but I'm able to stick to what I want to do. I'm tagging my trades better. I'm only taking executions that are appropriate, right? They're my actual setups. And you can see it goes through periods where we make money and then we kind of stagnate, we pull back some, just like a regular chart. And then as you stick to your plan, all you can hope for is that if you manage your risk properly and market conditions are conducive, that your profit goes up and to the right. Today, I lost a little bit. So this was at 3,000. Now we're just below it. Like I said, you can change this. So like I said, if I wanted to see from when the baby was born until now, I'll give you until then. It's April, what's today? The 9th. So from then to there, right? So now I stuck to my strategy. That's the difference between passing and drawdown, right? So sticking to your plan, having a good routine, being disciplined, and allowing your system to work. This is trading 1 and 2 micros. So I'm not doing anything crazy. I'm just limiting my downside risk. And I really feel like your ability to change this data for yourself, right? My win rate's only 50%-ish. It's more skewed, I think, because I'm shedding contracts and stuff like that, but it's pretty close to exactly 50%, if not better. And just being able to utilize this data to your advantage is going to really help you, right? I like this P&L simulator the best. I've posted it a lot on social media, right? This is my profit curve with every piece of data that's in there from beginning to end, right? And then, like I showed you, I didn't tag a lot of those trades early on were no setup, and even afterwards, there's been some times where I've felt like, oh, I need to catch in, and I've tagged it as a FOMO trade, right? But if I get rid of that no setup, I go from being, just shy of my P&L to look at this return that, you're getting out of just taking setups that are appropriate to what you're doing, right?
And hopefully, I think I fixed my mic too. So hopefully my sound, I don't know, it keeps defaulting to my earbuds, but ultimately, like, look, the P&L simulator, and this is how we're really trying to convey this message to people. Look, be data driven. Like, how do you look at this and not like go, oh my God, like this is how you get better. This is how you identify where you can get better, right? All he has to do is eliminate these no setups and he would have been done with his assessment, right? This is where we want people to start utilizing the data and start documenting. Because if he didn't collect this data, there's no way he'd know this. He wouldn't know any of this because he wouldn't be able to review the setups. He wouldn't be able to review what's working, what's not working. And that's most traders, is they're gambling and they're not really identifying or understanding how to look at the data. And that's what I hope everybody starts to utilize, is like use our dashboard or anywhere you can track data and just like really dig into it. And you're really going to understand like, oh my gosh, I could do this if I just improve in this area. And you do it at small steps at a time. Don't expect, perfection overnight. But this is great. Thank you so much for sharing. It's awesome, man. Good job on actually doing the daily check-in and putting in the work. That's what separates the people that actually win from the people that, it's the 5%, right? Only 5% of people make it. And that's because the 5% do this, right? And if you don't put in the work, you're not going to get results, period. Cool.
Yeah, absolutely. I really think that, I can go through these, you could spend days going through this back end. And I really think that if you don't do this, just go to another firm, really, if that's really what you want to do. I don't think they'll be mad at me for saying that, but like, this is what this firm is all about, right? Understand your data. Really, there's benefits to doing this. And if you can show them that you can be disciplined, then the sky is the limit, I feel like. And that's why I'm taking it as serious as I do. And I really think that, at the end of the day, this is what trading is. It's literally repeatable data over time. And that's why the stock market goes up and to the right.
Yeah. And, to lead you into this where he says, hey, look, don't come to us. I'm going to agree. If you're not using our tools and you're not, embracing what we're trying to teach, then go to one of the other firms. One, it's probably going to be cheaper. Two, you could probably pass it, and you're going to get stuck in this cycle of passing, resetting, and never really getting anywhere. You're just treading water, right? What I can tell you is looking at his data, when he makes it to the finish line, basically, of this, he's not going to have to go through the next step. We're just going to move him to the brokerage. The reason behind that is, one, he has a large data set. Two, he's managing risk. And that's what we look for. Like, he's not swinging for the fences on every trade. He's taking little base hits, right? And he's managing risk very cleanly. I know a little bit of hiccups at the beginning, but what's funny is you look at where he had the hiccups, and then you look at where he actually started implementing his morning check-in, and then you see an increase on his performance. Like it's not a coincidence. Like look at the actual data. It's like, no, when he started checking in every morning and putting in the work, his P&L went, way down here and started going well, hold on, nice and steady, Look right there. Look,
this is all
lowest point.
Right here. This is all check-ins, and I mean, really, that's when it got. I think it's even when you guys started implementing this daily check-in. Once talking to Discord and seeing that all the plans for things to move forward, it's really just a no-brainer, right? Everybody, they're putting the tools in front of you to allow you to succeed. And what I said before about self-accountability, I'll say it every single time to anybody who wants to be a trader. You have to be self-accountable, and this is where it starts, I think.
Yeah. But I mean, that's proof in the pudding right there for anybody that has any doubts. Like, put in the work and you're going to see results. And being accountable is very hard in trading, because look, there is no accountability. You're only accountable to yourself, and it's tough to be critical of yourself. I don't care who you are. So cool. I think we have a few more questions.
Sure.
And then we'll go from there.
The ideal account parameters. Well, it's a personal choice in that matter, right? It really just comes down to what you're willing to spend, and then what you feel like your system can generate over the time of your evaluation, right? The only other determining factor I think now is that they offer larger account sizes for people. So if you are somebody who wants to start the brokerage with $6,000 or whatever that highest brokerage amount is, then you just got to pick that. I mean, it's really what you're going to start your live brokerage with as far as your drawdown is concerned, and then you have to make that decision based off your system. I would love to just tell you that I picked this because it's perfect for me, but it was just what I decided to kind of wet my feet with. And I know my system can fit into pretty much most risk parameters as long as I adjust my size correctly. So that's something that starts you on the path of allowing you to make good choices when you're in it, right? So I can't make that choice for you. You have to just decide, hey, can I afford this? First off, if I can't afford it, then take a step back and wait a second. Obviously, ICE says you won the account, so you can afford it. Pick the account that you think best fits your best risk parameters, right? Obviously, when you want to go live, you want to have the most buffer you can, but at the end of the day, there is still, I actually limited myself to one contract, one NASDAQ. So I made sure I didn't over leverage, because I could get into the habit of getting onto two, and I didn't want to do that in this evaluation.
Yeah, and kind of going back to what he said about the account, pick the smallest account possible. Look, we will scale you, right? There's no point to picking a huge account and then trading huge size. Like, look at the account, understand and trade the appropriate size for the risk that you pick. And honestly, if you don't have a strategy and you don't have a clear idea of what the heck you're doing, and you're still, strategy hopping and stuff like that, get a practice account. It's $19. It's like a no-brainer. Like, prove that you can do what you're doing for $19. Like, it's a couple outings to McDonald's, or it's not a lot of money, and it includes all the data, it includes a test account, it includes all the journaling, and now you can actually forward test and prove to yourself what you're doing, and you can develop your edge. And that is like, it's $19. Like, it's night and day. And we price it that way. Basically, it's like our cost. And the reason we did that is because we want people to see the value and find the value in it. And because we offer scaling, once you get to the brokerage, like, don't sign up for a big account, sign up for a smaller one, and we'll scale you to the appropriate size based on how well you manage risk. And that's
once I saw that you guys scaled, I picked the smallest one.
Yeah, it's a smart decision, right?
Yeah, there's no reason to. Yeah,
there's no reason to spend more money. Like, there's not. It's like you'll get to the same spot at the same time. It's not like the accounts are different in that context. It's you're just putting more money, more risk on the line. And if you start smaller, it's actually good. It's a good foundation. So size down, size smaller.
Picking up on that is, trading is, as you can see, it's data relevant, right? So if I can make that dollar amount with $1,000 of drawdown, or whatever it is, and that's my risk parameters, now that as you scale, it's just going to scale based on your size and your drawdown and everything, how it works. You're not increasing, so much on like, I'm risking more or less. It's really just all percentages, right? So what I was taught always is you don't necessarily want to scale your system and skew things after you get more size. You want to keep the same system and just add capital, right? Because 1% of 10,000, 1% of 100, it scales that way, right? So don't change the system. Allow the system to work, and then it'll grow itself, right? You might start with $1,000 buffer, at 1, 2, 3, 4, 5%, and then all of a sudden now you have 5,000, 6,000, 10,000, and then now that's when you start to see that exponential growth. You're not going to see it overnight, and I think that that's what most people want to jump into. They're going to watch everybody on Twitter and all these things and see, oh, he's making 50 grand a day. Yeah, that's possible later. Don't rush into it, because then you're just going to get burnt out.
Yeah. Yeah, so once you're in the live brokerage, we have set like goals. If you take like a $3,000 payout, we'll start to scale you. Like that's an automatic. But if you're also trading and doing well, we'll scale you before that amount. It really depends on your risk management and how you're performing, right? It's performance dependent. So if you're not performing well, we're not going to scale you. If you're performing really well, then yeah, we're going to scale you. Or if you're performing, mediocre, at best, but you reached a $3,000 payout threshold, then yeah, we'll scale you. That's our commitment, right? All right, we're coming up to an hour, so let's try to get through some of these. Yeah, super common. So look, when you're focused on the results of a trade more than the process of a trade, this is what will happen over and over and over again, right? Because you are so results oriented. When the results don't favor you, meaning you get into a trade, everything's great. If you're making money, you're doing great. But the first time you get a losing trade, because you're so result oriented, that's like the end of the world for you, right? And now you do stupid stuff to try to get that money back. And now you're not even trading your system. Now you're trading your P&L. You're trading to get a result. And that doesn't work in trading. You got to trade your process. That's where I would suggest to start, is think about that, and also work on the trigger, in the sense that we talked about it earlier, right? Do a check-in, head to toe check-in, and do it after every single trade, and find out when you start sweating, hot behind the ears, tension, whatever it is, whatever your trigger is, and figure out when it is, and then stop. And that's the only way you're going to stop this from happening, is knowing yourself. Yeah, so KYC, look, it's a requirement. There's not anything we can do to circumvent that. I know KYC through Rise can be a little bit tricky. We have alternatives for payouts, including Gusto through ACH, as well as Wire or Zelle for US citizens. But ultimately, you're still going to have to go through the KYC process through the brokerage, right? Or a second hand KYC outsource company other than Rise, right? But we're always going to do KYC. If you can't make it through Rise, they generally don't tell you why. They don't tell us why, but it's a requirement, and we're always going to do that. So let's see, what other questions? Raj, you can go ahead and click some other questions, and then I think we'll wrap up. Yeah, so after a 3K payout, for instance, in the live brokerage, if let's say your lot size is 3 minis, we'll add an extra mini. You'll be at 4 minis. Another 3,000, we'll give you 5. Another 3,000, we'll give you 6, right? That's how we scale you. Ultimately, if you're a good trader and we feel like the risk is there, right? We're trading our traders in a sense, right? If the traders are performing well, we'll give you extra margin. We'll give you extra risk, and because you're worth it, right? And we'll also adjust your payouts and stuff like that, and take you from 80-20 to like 90-10. It just depends on your performance and how well, we want to keep traders. We want to keep good traders, and traders that think about risk first and profit second. All right, what else we got? Yeah, so I can tell you that if somebody transitions from the sim into the live and they start with smaller size, yes, the success is going to be a lot higher. I know this for a fact, because you give yourself more opportunity to make mistakes, to get comfortable with trading the live market. Nothing's changed. It's the psychological hurdles that you have to go through. So yes, there is. If you start smaller, you stay small, you give yourself more runway. That's all it comes down to. What else we got? Raj, got anything else? Yeah, I mean, I think everybody comes in thinking they're going to be the next millionaire or be the next trading savant. It's like that's not trading. Like everybody has like I'm going to be the best trader, and it's going to take me a year. And it's like 5 years later, like, oh well, that didn't take a year, did it?
No, it doesn't.
No,
It takes a long-
and that's what it is. It's a slow, methodical, annoying. It's like a really long walk in a really hot desert with a little bottle of water, and you got to make it last. And that's your risk, and that is all these other things. And it's not because you can't find good strategies. You're searching for perfection in an imperfect thing, right? There is no perfect strategy. There is no way to avoid all losses. Like you have to get comfortable with losing because that's part of the game. To be a good trader, you have to lose, and you have to lose gracefully, and you have to do it in a way that you don't jeopardize your entire account when you have a bad day, right? And that's either setting risk where you can't adjust it, or having somebody look over you, or trading with a brokerage that can control your risk. You know, you got to have safety and guardrails, or else you're probably not going to follow it. Will you scale down after payouts? If not, can you do so? Yeah, you can scale down it. Like when I meet with traders that are going to be transitioning to live, generally we try to talk about risk and what type of risk management they're employing. Like, right. So if they're risking $500 a day or $1,000 a day and their total risk capital is 3,000, if they're risking 1,000, that's not a recipe for success. So generally what I'm trying to tell them is like, look, let's scale you down to like 1 or 2 micros. Let's do it for a week, right? You have way more size that you have access to, but let's build your confidence a little bit. And once we do that, then we'll scale you up, and you can take payouts. And I think maybe your question was, can you take a payout and still get the same size? Yes. And you can also take a payout and trade less size. It's up to you. It's case by case. And we just are trying to help the trader actually be successful in the brokerage. On drawdown, any scaling also, if you had a 2K drawdown, took 3K payout, increase in drawdown also, or do we need to keep profits? So we're not going to give you extra drawdown. And the reason behind that is people will blow through it. We've seen too many people tilt. I mean, that's why we handle our payouts in a certain way too, where we lock your account, because we've lesson learned. We paid somebody out, left their account open, paid them out like $2,000. I think it was like $2,000, paid them out. And then they proceeded to continue to trade the account and took their $5,000 and turned it into $0. That was after we paid them. So then we took the loss on that. And then, a lot of times what will happen is a trader we'll have margin in there to cover the trading, and they'll eat into our margin as well. So we're always taking extra risk because of that, but it's fine. But that's why we like people to kind of prove that they know how to manage risk. And that's our biggest thing is like, if you can show us you can trade small and manage the risk during that time, then you're going to have a lot easier time when you transition to live, as well as managing live capital. But as far as just giving you more capital, as far as like drawdown capital, that's not normally something we do, because traders will tend to utilize it a little bit more, right? And you'll still have a daily loss limit in your live brokerage, because look, we don't want you blowing your live account in a day, 2 days, 3 days. We want you to actually think about it and maintain it to give yourself runway. Any other questions? And if not, we'll try to wrap this up.
Hey, what's up, Ray?
Cool. I think it's a shout out. What else we got?
I think that's it for questions.
All right, cool. So I just want to thank our guests today for joining us on the show. I really appreciate it. We really shared a lot of good things, and hopefully people listen and start putting in that extra work that most people don't. Check out his coffee. I haven't actually had his coffee yet. Maybe he'll send us a little this way. I'll have to sign up for his little program or whatever and order some coffee. Other than that, I don't have anything else to add. Do you have anything else to add?
No, I think, like I said, take it slow. I think the more people want to just gamble and YOLO their way through these evaluations, they're just going to keep failing. So just keep your wits about you. Start to learn a little bit more about yourself, and then you'll become what you want to become. It's just going to take time. Let it take the time it's going to take, and then you'll be all right. If you're interested in the coffee, it's at daytradingcoffeeco.com, and I do that write up, like I said, every Sunday. So if you feel like kind of just getting a feel for what you can do, just like a template, you could just go through it and say, okay, what do I need to look at for the week to kind of just prepare myself? So not necessarily, you can go if you don't want to go, you don't have to go. I just want to give you a template to allow you to make your own decisions.
Awesome. Cool. All right, cool. We'll go ahead and wrap it up here. Thanks, everybody joining. There's a link right there. Go ahead and click that link, everybody. And we'll see you next week.
Take care, guys.